Hello everyone, this is Mohammad Akif with Akif CPA, and today we'll be discussing how to do a bookkeeping cleanup in Xero. So this video is specifically for Xero bookkeeping cleanup. We have many other videos regarding bookkeeping, which includes how to clean up on multi-year account, how to do a financial review for year-end, mid-year, quarter basis, you name it. We got a whole bunch of bookkeeping videos on our platform for you, so you can grow your business, focus on your business, and then also understand how the finance works. It is very important to understand good, timely bookkeeping can save you taxes. It really can save you taxes because what a good, timely bookkeeping does is it gives you data to make financial decisions, to do tax planning where you can save taxes. You don't want to be behind, right? You don't want to go after the year end to your CPA or to your tax professional or to your accountant and say, this is what is going on, help me. Because we will have limited options. You want to be upfront, you want to take this head on and make sure that you are on top of your income. It's not just about making the money, it's also about taking the most money home. So we got a whole bunch of stuff with you. If you have any questions, shoot us an email at info@akifcpa.com. We can definitely help you. Again, this video is for Xero bookkeeping cleanup. And then we'll go into details what you should be looking at, how you should be looking at, and then what are the steps that you should be taking. So let's start. I'm going to share my screen with you guys so you can see what I am seeing. See. All right. Okay. So you can see that. You can see that. Perfect. Perfect. Let me do it and stop sharing. Let me just try this again. Perfect. So here we have a demo company that we'll be going through. And then so, we'll be talking about when we are doing bookkeeping cleanup, what are we looking at to see where the problems are, right? So first we'll identify all the problems, and then we'll give the solutions. The first thing first is that whenever we get into a Xero account, what do we look at? We go into reports. That's the first thing we do. So I have one company open that has a report going on. So we can see a profit and loss statement, right? So we'll go through profit and loss, and then we'll jump into balance sheet, and then I have more things to look at, and then we'll be looking at those too. So let's go through profit and loss and review our financial reports, right? So let's look at the profit and loss. So we can see, what type of income this company had throughout the year. We can see what type of expenses this company had. Is there any differences between last year and this year? Are there any missing, accounts that should not be here? We can all see, what chart of accounts were they using, right? So we can see it through the reports. It gives you a good summary of accounts. It's not a detailed thing, but it gives you a good summary of, how this company was running its operations, right? You can see if somebody was helping them. You can see if they were doing this on their own. I can see on this report, I can see pretty much a good income account. I can see cost of goods sold, cost of sales. I can see gross profit, what type of operating expenses they have in there, and then if their account that they should not be there, or their account that should, let's say if I see an account in expenses as a minus, as a negative account, that's a red flag. Then something is going wrong here. In these accounts, you should not, any expense account should be not negative account unless there's something happening out of the ordinary. Those are only specific issues. But majority of times, which is more than 90% of the time, the expense accounts should be all positive. That's what we're looking at. We're looking at how this was doing. Let's go for balance sheet. All right. So we have a balance sheet at December 31st. Maybe we can do this year. Date. And then I compare it 1 year, and then update. And over here, I can see assets and liabilities, and equity. I can see what was happening. how much money this business has. Sometimes I would see in bank accounts as negative numbers. Those are wrong too. Bank account cannot be negative unless you're writing checks at the end of the year, there's something else going on. Majority of times, the bank account should be a positive number. This is only happening if there's an overdraft, which I can understand, but that overdraft is temporary, right? It cannot be permanent. So that's something that we look at. We look at it gives a good summary of what is happening with the books. It gives a good health of what is happening in the books. So the first step is that we look at the financial reports, profit and loss, and balance sheet. So next step that we normally go for is chart of accounts. Through our reporting, we can see what chart of accounts the company was using. We can see if they were using accounts which were connected to, let's say, for example, it was a balance sheet account, and then it is being used in a profit and loss account. That's something that needs to be fixed. So normally when we're doing this, we go into chart of accounts, see what accounts they have set up. I can see they have business accounts, we have sales, revenue. I can see those two advertisement. I can see if they're setting it up, how they're setting it up. I can see all the details. So this gives us a good idea in terms of who was working on the books, what kind of knowledge they had, and then what were they trying to do. It gives us a good indication of did the person know what they were doing, right? If I can see something wrong in the chart of accounts, I know the base is wrong, and the base is wrong. That means reporting is wrong. So this is one of the ways we connect. And then so you can see many chart accounts here. I mean, this is office equipment. It's good. It's fixed assets. Perfect. That makes sense. Accumulated depreciation is also fixed asset. That's also good. Let's look at the liability accounts. Income tax payable. That's also a good right account. Let's look at equity account, retained earnings, depending on what type of company it is, right? If it's a partnership, it's a corporation, it's a disregarded entity. This is the equity accounts are set up based on the type of company for tax purposes it is. So that's number two. So first was review of financial reports, and the second was review of chart of accounts. So let's move on to number three. So which is one of the biggest ones. Reconciliation. When was accounts being reconciled? Meaning that when somebody is going in and matching your books, your Xero, with your bank account. When was that happen? Did it ever happen? Did it happen 6 months ago? Did it happen 3 months ago? We can clearly see this. And so, for example, let's go into manage account, and then we can go to reconcile account, and then see if this is happening. All right, so I can see, the reconciliation period shows 0. Okay, so there is no reconciliation period. So the accounts have not been reconciled. So that means we need to go back and work on this throughout the year. I mean, so that means we need to look at each account. We need to look at what was happening, and then how we can do this. And then so this is very important. This is very important when we are looking at banking, when looking at transactions. Is the bank okay with Xero? What do I mean by that is that the bank has all the transactions. Is it in Xero or not? That's number one, right? So let's look at the bank account transactions here. So you can see, if you see on the right hand side, it says status. It says unreconciled. That means these transactions have come in, but not in Xero. The Xero hasn't matched it with the bank. The reconcile, shows that they are in the bank. They're also in Xero. So these are important things that we are looking at. And then so again, right here, look at this. So 2025, I mean, of course, we know the bank reconciliation has not been done. The only thing that is showing is that the transactions are matching. So these are two accounts. These are two transactions that are still left. I mean, so there's a problem with the reconciliation. We can see there are two transactions from previous years that have not been reconciled. You cannot just do, out of the 12 months, you cannot just pick a month and do reconciliation. That means either you have to go in order for reconciliation to work. So it must be January, February, March, April, May, June. It cannot be June and then December, June 2025 and then December 24. No, it doesn't work that way, because the balance continues. You got to carry forward the correct balance. So the balance continues. So we cannot pick each month. And then so these are things that we are looking at when we are doing bookkeeping cleanup. And then this is very important. So number one is to review the financial reports. Number two is to review the chart of accounts. Number three is to look at the reconciliation for your banks and credit card. So now one of the biggest things that we have also found in over the years, and then a lot of people don't talk about this, and then I have seen other videos, I've seen other blogs which don't really mention this, but maybe it's a fault on the client part, or maybe it's on the software part. I'm not sure, but this is one of the big areas that is coming up to, and then I can see how this affects the transactions. This affects how the work is being done. Is really the bank rules. The bank rules really create problems for our clients, and I'll tell you why. Because what happens is initially when you bring in transactions, what the software is going to do is it's going to classify information. It's going to tell you, hey, based on what we think, sometimes it's doing a good job, and Xero does a great job. What will tell you, hey, based on if you're spending money at Office Depot, we think this should be office supplies. And for example, somebody was there and said, you know what? No, Office Depot was something else. And what it does is it creates a rule in the system where next time Office Depot, any transaction that has a memo or description with Office Depot is going to classify not as office supplies, but as something else. And then so what it's doing is adding the transaction for you automatically. You don't even know this at the back end. So now what we've started doing is we have started looking at the bank rules. The bank rules play a big role in a messy situation, because what is happening is you're importing transactions from the bank account. The Xero is picking up those transactions, applying the bank rules, and whatever the bank rules say, that's how the transaction is going to look like. So you don't want to be the one saying, hey, do this in this way. Majority times you are spending money at a certain place for a reason, and if it continues, it is for one reason. So make sure that your bank rules are also being looked at, because bank rules play a big role when it comes to bookkeeping cleanup. All right, so let's go to our last point will be to look at our AR and account receivables and accounts payable. Majority times when I say we're looking at accounts receivable and accounts payable is for companies who actually use Xero. So what do I mean by saying user? A user is a person who is actually using, making invoices, collecting payments on those invoices, putting them in the bank, in the software, not the actual bank, but in the software, in Xero. And then that's what I define as a user. And there are certain users who just use a software for transaction purposes only, meaning that they just take whatever's in the bank and then they report it in Xero. Then there are other people who actually go into Xero, create invoices, collect payment, put them in the bank, and does the whole process. So in that scenario, we have to look at these accounts receivable reports. We can see what invoices are open, what invoices are closed, if the money is being deposited into account or not. And so that's very important. So where do we see that? We see that in a balance sheet account, balance sheet report. So I'll show you where I'm talking about. Right, so if you go down, you will see accounts payable. So that means, this company is technically not using Xero in the same way. It's not creating invoices. Let me see if there are more. Okay, it's accrual basis. So if it's accrual basis, it will show. So this is accounts payable. This is coming from a bill or a tax payment that was recorded in there that needs to be paid out. That's what the accounts payable are. So we will see accounts receivable, we can see accounts payable, and then we have to go in and see what invoices were open. That creates also a problem, because we can see in some cases when a client is using Xero, is creating invoices, will take the money, goes to the bank, but never will report it in the Xero. And if the bank will send the transaction to Xero, then we can see the money coming in, but the invoices are still open. Right, so these are all the mismatches that we have to look at. So this is how we are doing bookkeeping cleanup using Xero. Right, so I'll summarize the whole video, and then so when we're doing Xero bookkeeping cleanup, we're looking at 5 different things. We're looking at reviewing the financial reports, we're reviewing the chart of accounts, we're doing reviewing the bank reconciliation, we are reviewing the bank rules, and then we are reviewing the accounts payable and accounts receivable. Once we review all those, we get a good idea of where the bookkeeping stands, and from there on we can find solutions. So of course, if the bank reconciliation has not been done, we got to do the bank reconciliation. If the chart of accounts are wrong, we got to fix the chart of accounts. If the reporting is odd and it's not showing correctly, we got to fix the reports. And then if the bank rules need to be fixed, we got to fix the bank rules. And then at the same time, if the accounts payable and accounts receivables are out of date, we got to make sure we close those invoices and your invoices, the vendor invoices, we close them down to get your bookkeeping to a good place. Again, timely bookkeeping is tax savings. It's very important to understand this. A lot of people don't understand. They're doing this all after the fact. It won't help you. It won't help the company grow. It won't help you save taxes. You will end up paying more taxes. So again, reach us out, info@akifcpa.com for any questions. This video was about Xero bookkeeping cleanup. Thank you.